This is Amit. This is lecture 11 of auditing. Now we are going to look at the audit working papers as mentioned in the 10th lecture. Audit working papers constitute all the documents prepared or obtained and retained by the auditor during the course of audit and conclusions. So these papers include any type of document that was prepared by the auditor. That means any type of calculations they have prepared on their own to understand, let's say ratio analysis is done by them on their own papers. They have done some other calculations, let's say calculation of interest. Such papers plus whatever papers they have obtained from the client, that is any documentary evidences gathered by the auditors asked from the client, and any documents retained by the auditor. That means any documentary evidences collected and retained by them in their audit notebook or audit file are the audit working papers. Audit working paper contains the essential facts about accounts so that the auditor may not have to go over the accounts of his client again in case he wants to refer to them later. So why these audit papers are prepared or retained is because whenever they want to verify anything in future, or maybe during the course of the audit itself, or after the audit gets completed, even if they want to refer to anything, they don't have to go through all the accounts again and again. They can just refer to the audit working papers they have prepared, obtained or retained by them to arrive at some conclusion or use it for some future references. Now, what are all papers constitute audit working papers? First is the audit program. As I had mentioned you earlier that audit program is the entire plan of the audit, what they are going to complete, how they are going to complete, at what date they are going to do, how much time they are going to spend on some areas in the auditing. All that stuff is mentioned in the audit program. So that's the main file they have to retain as audit working paper. Then working trial balance. Whatever trial balance they have taken from the client during the initial stage of the audit, and whatever trial balance that has been prepared at the end of the audit. Both the trial balances they have to keep in the audit working papers to show the difference, what it was earlier before the audit and what it is now after the audit. Then third is schedule of debtors and creditors, details of investments, fixed assets, etc. So while they do the auditing of the balance sheet, they have already taken the listing of all the fixed assets, the listing of creditors, listing of debtors, their aging. Aging means what? Let's say for debtors, how much money is receivable from the debtors, let's say within 0 to 30 days, 31 to 60 days, 61 to 180 days, to understand how much bad debt, how much provision they have to prepare for the bad debts. And the same way for creditors, how many creditors we are not going to pay, what is the aging of that, then whether we really need to keep that liability open or not, we not reverse that liability. Such type of details are kept. Then the correspondences between auditor and bank, debtor, creditors, etc. So these are nothing but the balance confirmation letters the auditors ask for when they do the auditing of bank balances. Now, for doing the audit of bank balance, we know that the auditor is going to ask for the balance confirmation letter from the bank. Then from specific debtors or creditors, the auditor may collect documentary evidence of as balance confirmation letter. They themselves send the balance confirmation letter to the creditors, to the debtors, and once they get the responses, they check the balance with whatever is shown in the books of accounts of the client. If it is not matching, they ask for a reconciliation. If it is matching, they keep it as documentation. confirmation letters, then photocopy of documents, abstracts from the minute book, etc. So minute book is nothing but, let's say, board of directors meeting that has to happen after every 3 months in the year, and at least four such meetings must happen during the period of 1 year. That's the rule of Companies Act. Now, to check whether that meeting has actually happened or not, the auditors may ask for minutes of meeting of the meeting of such meetings. So that is also a good evidence that they can keep in their audit working papers. Then, what are the main purposes of having the audit working papers? First is to support the preparation of audit report. Obviously, because when the auditor want to give their opinion about the financial position of the organization, the compliance, the internal control system, the staff, they have to keep some documentary evidences ready with them. So it helps them to prepare the final audit report. Then to provide evidence in case of any suit against the auditor for negligence. So if in future, if any suit is filed against the auditor mentioning that the auditor was negligent in the course or during the course of audit, then the audit working papers can be used by the auditors as a strong evidence to prove that they were not negligent. Third is to aid the auditor in conducting and supervising the audit. Obviously, the audit papers are going to help the auditor to complete and conduct the audit and complete it. Fourth is to enable the auditor to point out to the client the weaknesses of the internal control system, the inefficiency of the accountancy system. So, through all these audit working papers, they come to a conclusion that, let's say, the internal control system is weak, then it would be easy for the auditors to prove it to the client on the basis of the audit working papers. They cannot just go and start talking without any base. They have to provide some evidences to the client that, see, these are the areas where your control system, internal control system, internal check system is weak, and you have to take these many steps to get it ratified or to strengthen the internal control system or internal check system. The working papers help the auditor to plan the audit for the succeeding year. So now, as they already have completed the audit for this year, and on the basis of the audit working papers they have retained with them for the next year audit, those audit working papers prove to be a very good base for conducting the audit, because as in the earlier point I said that they can highlight the weaknesses to the client. Now, after they highlight the mistake, the weaknesses to the client is expected to take some action to strengthen the internal control system, to close the gaps that are there in the accounting system. Let's say any accounting standards are not being followed correctly by the client, and if the auditor pointed out the same thing to the client and expected that the client should follow that, then while they prepare for audit program for the next year, they can keep those points readily available with them, and they can first check in the books whether the client has already started following those things, whether they have strengthened the weaknesses shown to them, whether their internal control system is now working fine or not. So it helps them in planning the audit for the succeeding years. Then, what are the essentials of a good working paper? So, how that working paper should be. In order to enjoy the advantage of audit working paper, the following qualities are to be complied with. First is, in order to have full utility, the working paper should be complete, that is, it should contain all the essential information. Now let us say, if the auditor is auditing the provisions, so that part comes under current liabilities and provisions of the liability side of the balance sheet. Now, by checking the provisions, if the auditor checks provisions for only 10% of the samples, it's not worth, because whatever the expense for that period is, it has to get booked in the same year. So whatever the provision calculations are being done by the auditor, if those details are not maintained correctly, or only half details of the provisions are mentioned, then, because it's the main area where the clients make fraud. They don't show the expenses, they don't provide for it, so it becomes difficult for the auditors also to have it completed correctly. So if they don't keep the documentation, full documentation of that, it becomes havoc in next year. Then it should be arranged in a systematic way so as to help locate easily a particular fact out of the paper. So in a sequence, let's say if they have done the auditing of fixed assets, then the schedule of fixed assets should be there. Just below that paper, just below that fixed asset schedule, they should have the calculation of depreciation. They should have the schedule of fixed assets. They should have the documentary evidences of the assets that are sold. They should have the evidences of the assets that are added in during the year. If all these things are scattered in the file, then it's not going to help the auditors. It will consume a lot of time for them in the next year if they want to refer back to the working papers. The facts laid down in the working papers should be clear. Who wants to provide any vague information to the auditors, right? If the auditors themselves are keeping some vague documents, then as I had mentioned that 10 people are doing the audit of one company in this year, not necessarily mean that those 10 people are going to conduct the audit in the next year as well. So whatever is mentioned in the audit working paper, it has to be clear and understandable to any person. So next time when the new person starts doing the audit of that client, by just reading the working papers, that new audit clerk should get a feel of the business of the client. That person should understand what are the weaknesses that are there in the system, what are the good things that are there in the client side. So by just reading those working papers, the new audit clerk should be having a hands-on approach while performing the audit. The working papers should be of uniform size so that handling of the papers is easy. It could normally be A4 size paper, or it depends on the data that is being gathered. If we are taking the list of entire inventory, I would suggest to have a print on the A3 size paper because it runs into many pages. So to reduce the number of pages that are to be taken from the client, we can ask them to have it on A3 size paper, but mostly A4 size paper is used to have the auditing papers ready. But nowadays the auditors use the soft copies, so most of the audit working papers are maintained in soft copy. Each paper should contain some blank space so that an auditor can note down any point related to the contents of the paper. Yeah, that's right, but I would suggest to write the points first and then prepare the audit paper, so that the purpose of that particular audit paper gets clear at the starting of the audit paper itself. So the person who is going to read that paper in future understands that what that person is going to read on that paper, instead of after that paper is prepared. But yes, each paper should contain some blank space so that the auditor can note down any points related to the contents of the paper. Or I would say that even if such blank space is kept, then in future also, if the auditor wants to write anything after preparation of that audit paper, they can still go back to the same page and write, instead of creating a new audit paper for that. And the last point of the essentials is the papers used should be of good quality so that it doesn't tear off easily. So the paper quality has to be good. A normal A3 size paper of normal thickness is sufficient enough to have the working papers ready. But nowadays, as I mentioned, it's all digital, so mostly the soft copies are kept by the auditors. Ownership of the audit working papers. The ownership of the working papers belongs to the auditor. However, he may make some copies of it and give it to the client if they want. So it's the property of the auditors, because they are the ones who are going to prepare it. They are the ones who are going to keep it with them. They are the ones who are going to make amendments to it. So the primary ownership of the audit working papers is lies with the auditors. But if the client wants a copy of it, then the auditor can make a copy of it and give it back to the give it to the client if they want for their references. The auditor's right to working papers is, however, limited by the principle of confidentiality, which prohibits the auditor from disclosing the information to others without the management's consent, except when required by law. So if, as I mentioned, if there is a legal suit against the auditor because for some negligence, then they can give those papers directly to the law. They don't need to take any permission from the management. But in future, if someone goes, if I'm a third person and goes to the auditors and ask for some information about their client, they are not supposed to give it because of the confidentiality agreement between them and their client. So for that, if someone is asking any information about it, they should first seek approval from the client, and then only they should be in a position to share such information to the third person. Third one is audit report. An audit report is a written opinion of an auditor concerning an entity's financial statements. The report is prepared in a standard format as mandated by the generally accepted auditing standards, that is GAS. GAS requires certain variations in the report depending upon the situations of the audit work that the auditor is engaged in. So the audit report, it has to be in a specific format as mentioned in the generally accepted auditing standards. First, the balance sheet, P&L, schedules to balance sheet, schedules to P&L should be there. Then there should be notes to accounts. Then after the notes to accounts, there has to be auditor's opinion in there with respect to each point they have audited, and if there are any misses, they should give their observations in the audit report. So that's the way the audit report is prepared by the auditors. Now we are starting with the next important point, that is internal control, internal check and internal audit. As the size of an organization increases, it becomes difficult for the owners to control every activity personally. In such cases, the best alternative is to design such a system of operation that the desired control effect is attained. The operation of each work, that is the actual operative work, the preparation, preservation and distribution of vouchers, the division of work, the signature of approving authority, etc., are designed in such a way that least control needs to be exercised. So let's say, I'll give you one example to explain this entire paragraph. Let's say cash payment has to be done to some vendor. Let's say 10,000 rupees needs to be paid. I cannot just pull 10,000 rupees from the locker and give it to the vendor. There has to be some control in place, right? So there has to be some documentary evidence that I need to pay that much of money to someone. So it has to be effected by the request has to be effected by the person who has actually procured the services or goods from that supplier. Now the person has to raise the request. Now that request has to be approved by some authority of that person's department. So let's say if a logistics person has raised a request to make a payment of 10,000 to a transporter, then the logistics executive raises the request. The department head of the logistics departments approves that request. That approval goes to the finance person. In there, the finance person then prepares a document for making payment, a voucher. That again is signed by the accounting manager, and then the money is paid to the supplier. So it should not happen that I just need to pay to someone and I just bring some money out from the locker and pay to that person. It has to be effected. The request has to come from someone else of other department. So where the transaction actually started, from there the request has to be raised for making such payment, and then the finance department is the one who is the last person to make the payment, should make the payment on the basis of signatures on the voucher, the approvals through emails that are there and all. So that's what we call as the internal check, internal control. So that request is, the control is this entire process that is there set up so that the frauds can be avoided. The check is where the logistics executive is raising the request, but that is being checked by the department head of logistics department. So there the check is there. Then the accounting executive raises the request and the accounting manager approves it. So again, someone is raising the request, the other person, the senior person is approving it. That is the internal control that is there, and internal check is also there. Now we will go into all these points, that is internal control, internal check and internal audit, one by one in depth. We will start with internal control first. As per Spicer and Pegler, internal control is best regarded as the whole system of controls, financial and otherwise, established by the management in the conduct of a business, including internal check, internal audit and other forms of control. So it's a entire system of controls. As I mentioned, it's everywhere in the organization. It has to be everywhere in the organization. It can't be just specific to only one department or one person or one area. The internal control has to be there. It's a control system that is built in by the company to ensure that the company is in the best interest and doesn't lose anywhere in case of compliance. As in the Oxford Dictionary, internal control is defined as the measure an organization employs to ensure that opportunities for fraud or misfeasance are minimized. So, the example that I gave you about paying 10,000 to a supplier, there if let's say if I can just pull some 10,000 rupees from the locker and give it to some person which may not be a supplier, there is no control. It's a fraud. It's a misfeasance. So such things can be minimized if we have some good internal control and internal checks. Internal control is a plan of an organization and all the methods and procedures adopted by the management of an entity to assist in achieving the management's objective of ensuring as far as possible the efficient and orderly conduct of its business, including adherence to management policies and safeguarding of assets, prevention and detection of fraud and error, the accuracy and completeness of the accounting records, and timely preparation of reliable financial information. So the entire paragraph, the meaning of that is, company do not want any fraud or mistakes in the organization. Even if some person has a fraudulent behavior, if that person is has some fraudulent thoughts, still that person should not be able to commit any fraud. The process has to be set in such a manner that it cannot be cracked, it cannot be overridden by anyone's approvals, or it has to be in a specific format. It has to be strong so that the frauds can be detected very easily, and the business should not lose anything because of fraud or mistakes. The system of internal control extends beyond those matters which relate to the functions of an accounting system. It's obvious because as I mentioned earlier, that internal control is something that is there in the entire organization. It's not specific to any specific department. So only accounting team should not be held responsible for some part. It is the IT team who has some responsibilities with regards to the internal controls. It is the HR team who has some internal controls. It is logistics or materials management team who has these issues. Supplier management is having any is having internal controls. The same way even the finance team or accounting team is also having some internal controls set up for their work, and collectively it becomes the internal control system of the organization. There are some features of good internal control system. Internal control system is laid down by the management. It's not that every department head defines the internal control system on their own and they follow their own practices. No, it's a big decision to have the good internal control system available in the organization, and it is implemented by the top management of the organization. The people who are in charge of governance and management of an organization are responsible for designing and implementing an internal control system, not only in the field of record keeping but also in other areas like safekeeping of assets, etc. So as I mentioned, it has to be there in the entire organization. It can't just be done for only specific department. So, and only the top management is responsible to implement and prepare a good internal control system in the organization. Internal control system, it consists of various control procedures adopted by an organization in financial and non-financial areas. So as I mentioned, for making payment, the request has to come from the person who actually bought goods or services from the supplier. So it can't be just that there has to be some process defined, approved by the top management, containing what are the specific requirements the person has to check before the transaction happens, or at the time the transaction happens, or after the transaction happens. Internal control includes internal check systems, internal audit, and other forms. Safeguarding assets of the organization includes safeguarding authorized use, limited access, taking adequate insurance coverage, etc. And the fifth and important point of internal control is the aim of practicing internal control system is to ensure control over accounting and other administrative areas in order to bring about efficiency and orderliness in the operations. Now, the internal control is split in two parts. That is, one is accounting control and other is administrative control. In case of accounting control, the internal control system is applied to accounting system with the object to attain efficient and orderly conduct of accounting transactions, safeguarding the assets, prevention and detection of frauds and errors, ensuring accuracy, completeness, reliability, and timely operation of accounting data. Whereas in case of administrative control, it seeks to achieve adherence to the management policy in various areas of operations. That is, as I mentioned, it could be maintenance of machines, it could be HR operations, it could be IT, it could be bank procedures, it could be timely supply of reliable management information. So that way it is split into two parts. That is, one is accounting control and other is administrative control. Now we will stop here lecture 11 of auditing, and we will continue with the internal control system and other part of the auditing in the next lecture. Thank you.